Most people think bear markets are where opportunity disappears. But in reality, that's where the biggest opportunities are quietly created. Because while everyone is focused on what's falling, very few are paying attention to what's starting. And when it comes to meme coins, the biggest gains don't happen when the market is loud. They happen when the market is silent, when liquidity is low, when attention is gone, when nobody is looking. That's where the early positioning happens. That's where narratives begin before they become obvious. And that's why, cycle after cycle, some of the biggest meme coin moves actually start in bear market conditions. In this video, we're not going to chase hype. We're going to break down why meme coins behave differently in bear markets, where the real opportunity actually comes from, and how to think about finding asymmetric upside without guessing or gambling, because 100 times opportunities do exist. But they don't come from luck. They come from understanding structure, attention, and timing. This is Memes to Markets. Let's get into it. In this episode, we're going to break down 3 of the strongest meme coin runners from the month of February. And more importantly, how you could have positioned yourself early to capture those 100 times opportunities from the very beginning. We'll also look at where these tokens topped and why they failed to ever break their all-time highs again. Let's start with the first example, a token called Bad Bunny. Bad Bunny launched on the 8th of February. And due to the attention around the NFL performance tied to the name, this token saw explosive upside within just a couple of days. Now we're here on the 1-minute chart, and I want you to focus on the very first few hours of trading, because this is where the opportunity lives. What we can do is take the Fibonacci retracement tool from the very low to the very first high. Now watch what happens next. Price pulls back and taps directly into the 0.886 level, the deep retracement zone, also known as the blue pocket. And it reacts instantly. Strong bounce, no hesitation. Now here's where confluence comes in. If we apply the fixed range volume profile to that same move, we can see that price also pulled back directly into the point of control. So what do we have? Deep Fibonacci retracement, point of control, early stage momentum, all lining up in the same area. That is not random. That is structure, and just using these 2 tools alone, you had a high probability entry right at the beginning of the move. From that point, price continued aggressively higher. Now, if you missed that first entry, the market gave you another chance. As price continued upward, we can take the Fibonacci retracement again, from the low to the new high. And once again, price pulls back into the blue pocket. And once again, it bounces cleanly. Second entry, same logic, same structure. And from there, price pushes up into its all-time high. But here's where things change. After the all-time high is formed, Bad Bunny never regains strength. If we take the Fibonacci retracement tool from the very beginning of the move to the all-time high, we can see something important. Price never manages to break back above the 0.5 level. And that's a key sign of weakness, because in strong trends, price should reclaim that midpoint. But here, it fails again and again. Eventually, price breaks down through the blue pocket and continues all the way back toward the lows. And this is the full life cycle of a meme coin move. Launch, attention, explosive upside, weak reclaim, and then distribution. And if you understand this structure, you're no longer chasing the move. You're positioning at the beginning of it. Now, let's move on to the next token. A meme coin called Big Trout. Big Trout launched on the 5th of February and very quickly ran up to a market cap of around $2 million. But again, the real question is not the pump, it's the entry. So let's break it down. We take the Fibonacci retracement tool from the very low to the first high. And now we wait. Price pulls back. And where does it go? Straight into the blue pocket. The 0.75 to 0.786 retracement zone. The same area we saw before. The same behavior. And this is where structure starts to repeat. At Memes to Markets, the blue pocket is home. Now let's add another layer. If we bring in the fixed range volume profile, we can see that the value area low of this initial move lines up almost perfectly with that same zone. So once again, we have confluence. Deep retracement, value area low, early momentum, all aligning in one area. That gives us a clean, high probability entry. Now let's zoom out and look at what happens after the move. If we switch to the 15-minute chart and take the Fibonacci from the very low to the all-time high, we start to see the other side of the story. Price breaks down through the 0.5 level, the equilibrium, and over the following days, it repeatedly tries to reclaim it, but fails again and again. And this is important because the 0.5 level is not just a number, it's balance. It's where buyers and sellers meet. In strong trends, price holds above it. In weak markets, price gets rejected from it. And in meme coins, this level becomes a major zone for seal, profit taking, distribution, and failed continuation. So once Big Trout loses that level, the structure shifts. And what could have been continuation turns into a slow bleed. This is how traders round trip profits. They enter correctly, but they don't respect the exit signals. And understanding this one level can be the difference between capturing a move and giving it all back. Now let's look at the final token, a meme coin called Punch. For this one, we need to zoom out a little more to see the full structure. So here we are on the 30-minute chart. And once again, we're not chasing the move. We're looking for the entry. So we take the Fibonacci retracement tool from the low to the high. And we watch where price pulls back to. And what do we see? Price comes straight back into the blue pocket. And once again, it finds support. Clean, controlled, no randomness. Now let's add confluence. If we apply the fixed range volume profile from the low and drag it across the range, we can see that the value area low also lines up with that same zone. So once again, blue pocket, value area low, early trend structure, all meeting in one place. That gives us a clear entry. Now, if you missed that first opportunity, the market gave you another one. We take the Fibonacci again, from the low to the new high. And once again, price pulls back and finds support right in the blue pocket. Second entry, same structure, same behavior. And this time, the move doesn't hesitate. After those entries, price explodes to the upside. And in this case, Punch never really looks back. And this is the key takeaway. Not every meme coin gives you endless chances. Some give you one entry. Some give you two. And then they're gone. The opportunity's always early. And if you understand where to look, you don't need to chase the move. You position before it happens. So what can we take away from all of this? Across all three of these meme coins, the pattern was the same. It wasn't random. It wasn't luck. And it definitely wasn't chasing green candles. Every single move began the same way. Price launched, pulled back, and found support in areas of confluence. The blue pocket, the value area low, the point of control, structure first, move second. And this is the part most people miss. 100 times, opportunities don't come from buying strength. They come from understanding weakness. They come from positioning when price pulls back, when attention is still low, and when the market hasn't fully woken up yet. Because by the time a meme coin is trending, by the time it's all over social media, the move is already well underway. And more often than not, you're becoming liquidity for someone else. Now, this doesn't mean every token will go 100 times. Far from it. Most will fail, most will fade, most will never recover. But the ones that do move follow structure. And if you can learn to recognize that structure early, you don't need to chase. You don't need to guess. You just need to execute. So moving forward, focus less on finding the next big coin and more on understanding how these moves actually begin. Because once you see it, you can't unsee it. If you found value in this breakdown, make sure to subscribe for more clean, no hype crypto insights. This is Memes to Markets, and I'll see you in the next one.